Open. My name is Brian, here with Don and Cred. At least most of our health is in line. We're happy to be here with you. Our portfolio health might not be in line. Go to weeklyOpen.com/FTX where you can trade there directly from one asset to the other. Track your portfolio, dollar cost average in or out, whichever direction you think this market. Thanks to them for being our partners. Go to weeklyOpen.com/FTX. Let's get to the show. Brad, you're on the left. How you doing?
I'm okay. I came back from NFT NYC, which was great fun, with a bit of a tickle in my throat, and I'm like, oh, it's fine. There's always a cost to attending these crypto super spreader events and whatever. I'll be fine. And then I've become progressively worse. I look and feel like a mutant ape at the moment, which is maybe a fitting kind of end result. But overall, whatever, I'll be fine. The markets are interesting enough, and let's hope I'm around to see them in the next few weeks. How are you?
I'm doing well. I'm probably gave you COVID, and I'm now recovered.
Great.
Unless I got it in Austin and you didn't, or you presented later. I don't know. Don't know how these things work, but
there are no good or right answers when it comes to this stuff, right?
Nevertheless, I went through the same process and finally got over it. Definitely was a spreader myself, I believe. Don, how are you?
I mean, I haven't met any of you, so good.
It's unrelated to COVID. That's just like a personal note about both of us.
To be fair, I wasn't trying to give it to people. I just didn't have symptoms until later, and then everyone around me also got COVID.
Yeah, I feel like every single time we get these events, everyone gets COVID, and really bad too. Like I've heard so many horror stories of people just being sick for a week or two, like properly sick. So yeah, I've been staying away, living life. So yeah, it's been good. Besides the market, everything's been excellent actually.
Besides the market, yeah, markets are legacy markets in the U.S. are closed today. I presume the rest of the world is still open because it is not their Independence Day.
Yes.
But there's a little hint of green in crypto markets. Futures not doing too much. Don, you want to give us the lay of the land? Putting this Bitcoin chart in linear is giving me palpitations in the wrong way.
Yeah, it's kind of crazy, right? Like looking at it, how far it's down already. That's quite bad. But yeah, we're still at that. Like people have been saying, like, oh, we closed below 20K, yada yada. I don't really think that matters too much. We're still in the same area, right? And if you look at the closes, we actually closed exactly at the level, the all-time high level, right? So if you're already like freaking out because we're below 20K and close that way, I don't really think that makes too much of a difference. Still at support. Now, whether that's going to hold or not, I don't want to make any promises. I'm still positioned. But yeah, we're still at support. Nothing's really changed from last week. I think I said on this show actually last week that I think it's going to round out into the support. So far, so good. I hope that kind of actually rounds out and doesn't just completely fall through. But I'm weirdly optimistic, honestly. Like I'm looking at the market and I feel like it's time to mean revert. Could be wrong on that front, obviously, but I'm not panicking at all. I just feel relaxed. Obviously not fun to see prices go down and down and down and down only. But yeah, I'm optimistic for now on the weekly. The same story really on any other time frame. I think the daily, like if this kind of continues to round out, don't really see too much of a problem. That said, like on the daily, if you want to play the momentum, I think you can play it here. Momentum playing hasn't really been going too well. I'm just glad I just positioned myself and haven't done too much. But I think if you're doing it, looking for kind of a trigger, closing above 21K, at that point it starts looking better again. But the last few setups that were like momentum kind of setups didn't really play out too well. So I'm not entirely sure if this is gonna trigger either. So I'm just positioned doing nothing really, besides like trading the altcoins around a little bit. But
have y'all noticed? It feels like we're starting to do that thing where the volatility dries up, and can't tell if it's just consolidation before the volatility increases a lot, or if it's like that 2018 style volatility where we're just going to go sideways and punish people in both directions for months.
Yeah, volatility's dried up completely. Like, look at the 4-hour chart, for example. Over the last couple of days, it's I thought my trading view was frozen for a while.
It's not quite Bitcoin like 50-cent ticks back and forth, but it's not great.
Yeah, every time the markets close, it gets really bad, like the traditional markets. But even when they're open, it's like it's much less. So I think it's probably going to be a mixture of both. Like, we're going to kill people in both directions. I'm not entirely sure if we're going to go up first or down first, but I think we're going to kill like people on that bet, basically on sideways, and then we're going to go sideways or the other way around. I don't think there's going to be like a straight move back to 50K, and I don't think there's going to be a straight move to 10K. A lot of people kind of seem to be suspecting that. I think 20K, just by virtue of it being the old all-time high, the old cycle, just makes a lot of sense to spend time here, whether it's bullish or bearish. Like, oh, Cred, Jesus fucking Christ.
I'm muted. There's no way you can hear that.
Oh, we can hear that.
You're definitely not muted.
Oh, I'm sorry. Yo, okay, I'm gonna go just cower in shame now. Can the audience hear that though? That's what's important. Because I was muted on the restream thing.
Oh,
surely they can't hear my sniffling.
I could.
Yeah, you guys I don't give a shit about. You're gonna sit here and listen to me vape, snort, put my head through the drywall. But as long as the audience is fine, then the show is good to go.
The chat is confirming that they could also hear.
Oh, great. Goodbye.
Oh man, but yeah, I think like just by
look, it's just a natural reaction.
That's Cred's market summary.
Well, yes, but it's also a natural reaction to me hearing Don say anything. He's like, so I think I'm like, I hate this guy's opinion. Meaningless conjecture.
Oh god. But yeah, so I think just based on it being the cycle high, it makes sense to spend time here. So that's probably what we're gonna do, with some volatility at some point, but I wouldn't expect too much. But yeah, I remain positive. Don't really see a reason not to, just based on the fact that we've been waiting for this level for ages. Now we're there. Might as well do business there.
Cred, do you have anything else to add to that?
No, I think I've said it all, haven't I? Yeah, sure. First things, apologies for that, obviously. Apparently the mute button does nothing, which is an interesting revelation. Thank God I found that out now, not during some of the other times on this call. As far as markets go, yeah, I didn't disagree with anything Don said there. Like, if I'm staying down at the pub and my mate was like, look, I'm long 20-ish and I want to sell 30-ish, because if that doesn't work, then it goes to zero and we all buy more or less the same levels anyway. I'd be like, yeah, fair enough. It's like a decent idea. And, you know, I can screen share this for a second as well. Chrome tab. No, not that one. Yeah, this one. One thing which I've spoken about, I think on this show on the way up, like back in the day on other shows as well, is that when the market is going up, one thing I like to do is to kind of cluster these moving averages together to give me an idea of, like, if things even just mean revert, am I happy giving back all the gains that the market's made from those clusters? So when it's on the way up and you see that the moving averages or whatever are clustered 20, 30, 40, 50% away from price, you kind of have to ask yourself, you know, if the market were to erase all of the gains and close that gap between where it is now and where those mean reversion targets are, am I comfortable like keeping the full exposure I've got right now? So it's not even like a trade idea per se. It's kind of a risk management check, so that you're not caught totally flat-footed if you get what is by definition a counter trend move, right? So if price is above and clear of all the moving average memes, you're thinking, am I fine with this haircut if the market goes down? And I think it kind of works in a similar way in reverse, where we are so far away from all of these like quite standard mean reversion targets that it should inform your decision. If, for example, do you want fresh short positioning here? Or like, how shocking would it be if the market were to go up for like 1 to 4 weeks, whatever? Like, maybe with the whole contagion macro backdrop, it would be shocking. But like, I mean, just look at some of this stuff in terms of where we are now, 20K. the earliest higher time frame kind of trend proxy, discounting the 200-week moving average, which I'm sure Ledger and I will make out about on this show, given we've talked about it every week. We're talking like 70 to 90% for what would be a kind of bearish retest on the higher time frames, right? Even if you forget the moving average memes, if you look at higher time frame levels, where is the first kind of visible higher time frame bearish retest on the chart? Like, it's all the way up at 30K, right? Because there's nothing else. There's kind of hot air otherwise. I mean, maybe you want 29, 28. That's a distinction without a difference. Even just like a bog standard bearish retest is 60, 70% away from current price. That's kind of how strong and one-sided and overwhelming this trend has been. So I'm still, excuse me, not interested in kind of short positioning or anything like that. That's kind of not within my mandate. I don't want to babysit or manage those trades. I'm still looking for longs. My criteria haven't been met. They're a tiny bit stricter, as I'm sure we can discuss. But like, just in terms of overall market view, that's kind of how far we've come. That's how strong this trend has been. And as we've covered extensively, and I still think it's worth reiterating because it's true, there really aren't that many levels left where you can like take risk and then not feel like a dickhead if it goes wrong. 30K was one of them. 20K is one of them. And then if there's a meaningful break of 20K, I mean, 14, 12, 10, whatever, at that point, it almost doesn't matter because we're fighting for our lives, right? So I don't think that we're particularly spoiled for choice in terms of levels we can poke and prod the market and not feel bad. And we happen to be at one of those inflection points. And so I think it makes sense to look for setups should they trigger. For me, that probably takes one of two forms, or at least the more obvious one is I still quite like the 200-week moving average meme. And I call it a meme, but at the end of the day, if market participants are using it as a proxy for trend or for positioning or, you know, contributing to open interest as a result of this thing, then it's going to be relevant to me. And at the moment, unlike previous iterations or time spent at this level with a huge sample size of 2 more recently, but in the past in general, the selling tends to kind of, at least in previous, you know, breakdowns, that's where it's kind of slowed down and started to churn, congest and whatever else. Even if the reversal wasn't imminent, as you've kind of seen in the previous examples, we're talking like a couple months glued to this thing at least. That's more or less where it slowed down, and then where you got your subsequently meaningful high time frame rallies. This time we've just been closing below it, which is kind of shitty. But that also means that if we reclaim that, all these consecutive closes, presumably acting on bearish signals, a lot of that fresh shorting interest, open interest, or just that market view would be wrong. And I think that would be plenty of fuel to actually offer the first meaningful mean reversion that we've had. And again, just not understate how insane this trend has been. The only visible counter trend bounce that we've had since the top was Luna buying, and that was the thing that sent the industry to zero. Apart from that outlier event, which ended up being a Contagion, 3AC, Black Swan, everything to zero, Celsius, Voyager, whatever, like apart from that one independent bout of buying, like if you were to erase the whole Terra Luna leg of their public Bitcoin buying, it's literally been down only since
35 weeks.
Yeah, it's shocking. It's unbelievable in that regard. And so trading, you know, the classic joke that I take one trade every 10 years, etc. It's more like 20, so get your facts right. But it's been a good market where if you have slightly tighter entry preconditions, I at least have felt safe / rewarded, and I don't feel there's strong evidence to support being early to this type of trend. So I need something. I need someone to get trapped. I need some sort of catalyst, or for once, just the evidence of absorption and a failed breakdown as opposed to a real breakdown. And for me, the earliest place where that could happen now, well, it's either at those much lower apocalyptic support levels where we're all singing Kumbaya and buying together, or it has to be a failed breakdown of the 200-week, which is around 22K. So if that's going to happen, it has to be, I think, over the next few weeks. That'll be a great setup. If not, then I guess we keep doing the same thing. And I agree with Don that 20K psychologically or even structurally, it's a decent spot to expect a bit of churn and a bit of slowdown.
Yeah. I've been watching this 200-week pretty closely because, as you mentioned, people like me like to look at it. It's a tricky one because you can use it obviously as like a here's your perma support. sometimes people also just use things like that if they're more in the I'm reloading because I offloaded when things were too good or whatever, and they're just trying to figure out where do I DCA back from. So essentially, instead of trying to consider it like a trend rally, it's more like a value, a trend line. It's more like a value line. So if you say historically, that should be, well, the average price over a course of 200 weeks, right? So I'm getting it cheaper than the previous 200-week average of whatever other people could have gotten it for. So if you're like convinced of I want exposure to crypto either way, then you could consider it that value line. That's also very copy to talk about it that way. But that does show up in some other kind of trend metric type stuff that you see. I think it from a support perspective, it's definitely concerning that in its fourth test, it is not like capturing that line or like holding that line on the weekly basis. The closest analog there was the really first time that Bitcoin ever did that in August 2015, where it's been a few weeks kind of grinding along that line. And the difference now, and this is what makes it hard using any kind of trend thing or moving average as some kind of exact science, like to the penny type of thing. Now, we're like a 10% move away from it, 15. So a 15% move to get back to that line is a little dicey. Like this is in a traditional, how do you think about these as a trend line perspective? That is more of a, you sell that retest all day type of thing,
Like it's broken, right? Like at face value,
yeah.
this thing was and has been good support. From the available evidence, it's broken. Maybe it's discounted. Sure. If you bring up ETH for like a half second with the same thing, ETH USD, I think it did that exact underside kiss that you talked about at that level, right? It's kind of like you got the discounted entry below it, and then it also capped the market to the upside, which kind of sucks in the short term, right?
Yep. And that could happen with both of these again, right? You go back up there and then test the market again. You're essentially letting the market tell you whether it's interested in that at all. On the flip side of it, using the same exact system, right? This was my conviction back then. I exited all markets in April 2022 smartly, because then they just went only down, and then I got back in at some point, unfortunately. But now if you go back to that same like faster trend line, it's 140%, but let's say it takes some time to get there, you're still looking at maybe 120% move in Ethereum to just mean revert, to Don's point. So we're at this weird place where we really do have that small gap, but the upside or that small band until new lows. Everybody's staring at whatever doom posting number they have now. We keep moving them down, right? It's 14K now. 14K seems optimistic to people, and they're talking 10K, 8K, 3. I've seen 3K.
It's absolutely nuts.
Yeah, they're bringing back all the levels. But that mean reversion target, even in Bitcoin, I think is probably reasonably 50 to 70%, and 100% plus on a lot of other stuff. So your classic kind of risk reward argument is pretty good. At the same time, like in a vacuum, I don't like that consolidation. Like this is a very grindy bottom type of thing, and it's also really only kind of one test in both directions, and now we're sitting in the middle of it, and I'm not even sure I'm going to believe the next iteration of the test up or down. So a big part of me thinks we could basically spend the entire month tricking people about which direction it's going to go. I don't know what stops us from that, I guess. Do y'all have any reason to think that this next move has to be imminent, or do you think it could occur in August or later?
I mean, it's literally a wasteland. It's just Don buying and Mashinsky selling into him. So I look forward to seeing who wins that one,
I think it can take quite a long time. But like you said, the mean reversion, like we're down so much now, right? That the mean reversion alone is worthy to play, right? Because sometimes
it's large.
Yeah, sometimes you have like these moves where like something moves down 30%, and then the next resistance is 10% away, and people try to play the mean reversion. And I'm like, okay, dude, this is trending, right? This is like clearly, and I mean, this is still the case, right? This is clearly trending down. This is down only, right? But the value that you can capture if you caught the mean reversion only, right, doesn't have to be like the bottom, just the mean reversion, is so large that it makes sense, right? As like just as a trader, if you believe that this thing isn't going to zero. Because I think like if you're targeting 3K, if you get to buy 3K, it doesn't make any difference whether you would have bought 10K or 3K, because it's going to zero afterwards. Like if you're targeting 3K, I'm like 95% certain that like it wouldn't have mattered if you bought months ago before at higher prices, because you're going to ride this thing to zero.
So you think if Bitcoin goes to 3K, it's dead forever?
I think so. Yeah. I don't think with like speculation, like with something like Bitcoin that's like so like based on speculation, if you erase all of this and go all the way back down, and I've never said this like back in 2018 or anything, like we had that argument come up when prices were low. I didn't say it back then because like that's not like erased an entire cycle. And I think in this instance, like if it goes to 3K, there's so many rich people now in crypto that could buy so much that something catastrophically would have had to happen. I mean, if you just look at how much stablecoins there are out there, right? I think just measuring them up against each other, right? The market cap of crypto against the market cap of stablecoins. If we go to 3K, you're going to have much more stablecoins than market cap in crypto, right?
Yeah, it's also about a 96% drawdown, I think.
Yeah. Like at that point, I think you're just being unreasonable, right? And people keep moving the prices that they want to be buying lower and lower and lower. And then I think at some point, like the lower you, like at some point it doesn't make much sense anymore, because like I said, you're basically betting on this experiment failing, and then you want to buy the moment it's basically failed. So I think like that is stupid. Obviously, there's higher levels than 3K. So like if you're targeting like sub 10K, I think that's very, very, very unlikely, but not necessarily death of it all. But yeah, I just wanted to kind of mention that because I've seen like some stupid shit floating around where people are just like, yeah, I'm going to buy a shitload when this thing basically goes to zero. And it's like, I don't think that's very smart. But yeah, to like your point of does this have to move immediately? I don't think so. This could like go, I think like just looking at it and looking how previous, like this doesn't have, like I said, this doesn't have to be like a long-term bottom, but how previous like bottoms have kind of played out, they can take a while, right? And in this instance, it took us basically after the crash, it took us 140 days. So like 20 weeks. That would take us all the way to like, October, basically.
I do think that fractal, if you will, would be the type of thing that's completely reasonable, and we troll everyone 2 years from now who didn't buy
that. yeah, exactly. Yeah.
Like we've hit a point where it could realistically be a bottom.
Yeah, I think so. I think it's not very, very like it's not like something I would say like, okay, it's more likely to be bottom than not, like a long-term bottom. But I think the chances of this being a bottom, like a longer-term bottom, is actually like quite significant. Like not in my head anyway. Like that's the kind of mindset I'm going at it, where I'm like, okay, this could be the bottom. I don't really care too much because I'm just trading it. But I think the fact that no one's even targeting new all-time highs, like no one even dares to talk about it anymore. The very, very brave people talk about a mean reversion above double. Like 20K, right? Yeah, I mean, even the double is like, that's like
very aggressive.
Crazy people talking. Yeah. And then you have like people like us, or like, for example, like I'm bullish and I'm saying like 28K. This is like the mean reversion, like the most bearish thing you could get, right? And that's my target. And I'm being kind of like, people are saying like I'm the biggest bull around. It's like, what the fuck? Like that's like not a move for Bitcoin, right? That's like one weekly candle, like in percentage terms, that we've had in the last few years. Like there's been bigger weekly candles than that. So yeah,
there's several challenges in terms of trying to call that. One is the whole recession risk thing, and what's crazy is there's very little there's very little pushback that we're either already in a recession or going into like a deep recession. I think actually markets are kind of pricing in at least some degree of recession already in legacy markets, and there's not a lot of consideration for, well, what if it's not, you know, and those are the scenarios where, you know, all of a sudden some form of like softish landing does happen to work and yada yada, and you know, we get a much bigger move, or the economy doesn't go straight to zero. Like the economy itself might take its time to go through its pain, or maybe we've peaked in terms of its pain and we've already essentially priced in, and may have another year or two of slow economic activity, but we've basically kind of met the conditions from a market perspective to price that in. Like I was hearing people talk about Facebook being a value stock now, like from a definition standpoint. There's a lot of interesting stuff like that as well. And I think you do have to have some of that line up, because if big time weakening economy is not fully priced in stocks, then crypto's probably, it might bottom first, but it's probably got more downside. I keep looking at the dollar. This thing has just been so strong. It's definitely lost a little bit of momentum, but there's nothing that I really look at up to a monthly point of view and think like, oh yeah, this is definitely going to nuke like 10% now. The only real thing I can look at in that regard is if you look specifically at the Euro USD, largest component, also seems ripe for a mean reversion or some kind of activity for this. Essentially, it's almost at parity right now. So if it defends that, basically, and yeah, I don't know. It's just,
you bring up a funny point with the macro stuff, and I agree with you completely. It's like the same people, excuse me, who are completely railroaded by the macro shift in conditions and inflation, recession, tightening, etc. It's like the same group of people that got completely blindsided and shafted by that move are now the Fed experts who are fully confident in like recession and infinite tightening and this, that, and the other. It's like, hold on, what qualifies you for me? Like, why should I take your opinion seriously, right? Like, you got this wrong. You're on the wrong side of this. So your if your predictive power as to the future was so great, you wouldn't have round tripped your portfolio because of macro. But now that you have, I'm supposed to listen to you on macro. It doesn't make any sense, right? I think some humility as to the larger forces at play and headwinds or whatever else is definitely warranted. You and I talked about ages ago, Ledger, how the 50 IQ trade might be one of the best ones, at least from a timing point of view, which is, you know, long easing, you know, and de-risk tightening, and then just keep running that back over and over. And it's very unlikely you catch the bottom doing that, because markets, whatever, forward-looking, future discounting and all that type of stuff. But there's going to come a point where Powell or the Fed, whatever, in some unambiguous form are going to say, okay, we're going to start supporting the economy or buying shit or whatever else. And I think the participants who are going to take that signal seriously, just like those who took the opposite end of that seriously, will end up doing quite well, even if it's not like the Donald Pico bottom type of thing.
And as we found this time and previous times, it's not a matter of when that actually starts necessarily. That's an impact for sure. Like we saw more aggressive selling when tightening actually started having, you know, rates actually started rising. But the notice that tightening will not occur forever and our balance sheet drawdown will not be something that we do forever, can be enough to kind of signal things, especially in the derivative markets, which crypto is one of those, right? Of bigger macro markets. So all it really takes, truly, is a sentence or two from Jay Powell to like get people slightly less hawkish, and off you go. You know, there's your mean reversion move at a bare
minimum. And they've been unambiguous, right? Like, yeah, when we were really sitting around in Austin, you know, the central banks were like, there's pain coming ahead, and we're sat there wondering, I wonder what's going to happen to asset prices. Damn, this is so cryptic. And, you know, is this a coded message? It's like, no, especially with their credibility threatened by how late they were to combating
the
inflation.
transitory meme really
The
killed
transitory meme absolutely butchered them, right? And so I think that'll be corrected for in much clearer and ambiguous language. I mean, that also means they take the inflation threat very seriously and probably have/will overcorrect, which is fine. But the overcorrection dump maybe gets a overcorrection pump eventually as well, right?
Yeah. And I think just trying to think logically through what's going to make things ugly. You can look at some seasonality stuff. So inflation obviously is not transitory, but inflation comes in different ways, right? There's the price that you pay for things at Walmart, and then there's the price like at the source. So what farmers pay for fertilizer and fuel and you know the access that we have to wheat, like the true basic necessities for human beings. And I think actually that's where we could start to see some cracking in inflation, is where those are going different directions. So like your toys or like cheap crap are now oversupplied from an inventory perspective at your big box stores and whatnot. So that type of stuff becomes cheaper because nobody wants those things. But you're like things that essentially people are not going to change their usage of. Like they're not significantly able to change the amount of natural gas they use during the winter when they're going to need that, or they're still going to need to do their commute, or they're still going to need to make bread. You know, like those goods, the supply chain issues, the inflation issues, all the things that have compounded and created this like perfect storm of price escalation could continue. So you could have inflation really continue for basic necessities, especially through these important seasons, you know, whether it's summer travel season or like fall for, you know, as people are going to need to turn their heaters back on, like pretty depressing stuff. But I could also see that being the kind of climactic inflationary prints, um, and that's kind of your recessionary quarters. You have a 2, 3, 4 months or 2, 3, 4 quarters of slower economic output, and then you kind of turn the tide next year. But there's nothing that stops markets essentially front running a lot of that stuff, because I think we are pricing in like really significant pain along those lines for, you know, for the most of this upcoming year. What do y'all think about that?
Yeah, I can do a final bit of macro larping.
Yeah, that's all I'm really doing as well. It's just I'm just
happily.
Yeah.
Yeah. The only other thing on my radar is my understanding is July seasonality for equities has been really good, just in general. But the reason for that, like, the reason has been earnings, sort of across April, July. We've got that coming up as far as economic calendar things go. So we'll get a chance to see how well or how poorly firms have adjusted to these conditions. And so if you want your kind of macro type of catalysts, either, you know, trend continuation because everything looks bleak or worse than expected, or maybe a bullish surprise, which is a cursed phrase to use nowadays. We've got that to look forward to pretty much this month. So the argument being, well, you know, if we have some sort of correlation with equities and July is good for equities, maybe equities go up and we go up with them. I think there's reasons to be at least skeptical of that premise. One is because on the correlation front, we haven't been enjoying the upside that the S&P has enjoyed on its rallies, right? Crypto contagion and the supply overhang and whatever else has meant that when it's to the downside, we kind of play along. And when an S&P pumps to the upside, we've sort of been lagging. I'm sure Don can tell you all about that. He's had a fun time calling the S&P 500 perfectly and trading BTC instead. But the second reason to be skeptical is, yeah, I mean, if earnings are the driver of a bullish seasonality and earnings come out to be crap, then that argument becomes slightly less persuasive. But that's the real reach of my pseudo knowledge of macro stuff.
Yeah. I mean, I agree with that. That actually makes a lot of sense. Something that I want to talk about is because a lot of people keep talking about like Bitcoin has to kind of follow the macro, whatever, right? And if you quickly like show my screen, if you kind of compare the two, right? So like Bitcoin's trading back at 2017 highs, right? Exactly 20K. If you compare that with the S&P, if the S&P went there, right, that would be basically dropping 30% from here, right? So that you could either make the argument, okay, this is like hilariously weak. And I mean, I think that's definitely true. But you could also make the argument that Bitcoin basically front ran a lot of it. We're now like this is so far away from where the S&P is just in comparison, that you could also make the argument that, yeah, we just basically front ran it, and we could decouple just, or like hold levels like this, because we've already gone through much more. Like, we've gone through such a huge drop already in comparison that just being like, okay, the macro is really shit. And I mean, I do agree on that front. And this could all just be me coping. But you could make the argument that we've gone through most of it already, just based on that, right? Because, yeah, it's on the one side, it's definitely weakness because we drop more, and that's usually something I look out for. But it's also, it's just weird, right? When you're like, okay, the S&P is gonna go down like all the way to that level. I mean, what are we going to do if we just one-to-one correlate the entire way down, and where are people going to get the coins to sell? I don't know. It just kind of seems weird, right? Like, if this tiny drop has already led to this, and you make the argument that it's just going to be more of that all the way through, then yeah, you would have to expect it to go to near zero levels, I guess. And that just seems very, very unlikely to me. But maybe I'm just like sitting in my position being like way too comfortable just looking at this. But yeah, it's definitely interesting that we are so far away, like so much weaker, or have been anyway. And I don't know, maybe I'm underestimating how bad it is, just based on the fact that I haven't been in the market since like the highs and just jumped in now. But yeah, I look at these kind of things and I'm like, okay, I think we've gone through the majority of the drop already in crypto. But yeah, you can kind of put that as you want, basically.
Yeah, I mean, when I just look at things from a chart perspective on the S&P, it really looks like it wants another 6, 7, 8% to me. That would
up
be
or down?
A down.
Okay.
At least in terms of trying to make a bottom. Like, so the up portion of that would feel temporary, if it was kind of up in the meantime, if you will. So like, after you're on a monthly chart, right?
Mm-hmm.
So after a down month like that, you could revert halfway up that candle and then make your way back down. But that next kind of cluster that you're in, 3,500 or so on SPX, or 350 or whatever on SPY. There's that cluster back from late 2020 that the market made new highs and then went into like absolute mayhem territory to the upside. A retrace of that all feels very likely. It's also right where the 250-week moving average is, and also some other trend stuff that I look at on like weekly timeframes. So that's the hard part that I have. And Cred, you bringing up July earnings, I'm really not optimistic for earnings season. And I'm not sure what the market's priced in. So it doesn't, I don't really know, like if the market is expecting extremely positive earnings still. My personal guess, though, would be that a lot of sectors are going to start really rolling off their earnings, and you're going to see a decent amount of profitability going down and whatnot from an earnings perspective. This is completely just a side thing, but I was talking to a home builder who they were talking about how they had a really, really good 2020 because everybody was going nuts, right? But they said that in 2021, they actually really struggled because they basically just couldn't keep up from a pricing perspective with the cost of goods to them. So when you have that interesting situation that a lot of businesses do, where like your pricing may be locked in, but people you're buying from on a shorter time scale for production are like raising their prices on you, it can put a lot of strain on your business. And even though it's a business where people are still spending a lot of money, it makes it hard to be profitable. And I think that actually has a reasonable translation to a good number of industries. But if you're going to pick one industry, home building is a reasonable one to do so, And I think that's one of my fears for this market is either people they don't have enough volume because there wasn't enough supply, like too much of the supply shock issues. Then the prices go up and it makes it hard for them to keep up with their own prices. And I think those things can be quite a hindrance on an earnings season. So again, macro LARPing, speculating, whatever. I've always tried to do that. I've tried to blend in a macro analysis to whatever else I'm doing. And I think that could be, maybe it's what puts the brakes on our little mean reversion potential for crypto, or maybe it's what gives us the break to the downside. I do think y'all are both dead on that we went a lot faster than the legacy market did. So I could totally imagine us bottoming faster. I would actually like to see that. It'd be good. It'd be good if we could like find some trends there, some patterns there, you know?
We've done it before. Like, it's not like this is like unprecedented where crypto like bottoms before legacy does. I mean, during the COVID crash, we had a bottom, obviously by just a few weeks, but still, right?
A few weeks is a lot, though. You know?
Yeah, it is. It is. And I mean, that said, like, we bottomed with such speed and then had like such a huge rally immediately afterwards that it's like hard to compare the two, right? Because this one is the slower brother, basically, right? You had like this thing, and now what I'm expecting is like something round. So like it's pretty tough to kind of compare the two. But yeah, I actually really like that if we manage to put some strength into crypto that isn't necessarily, or has not, doesn't have to be like reflected in the traditional markets, because that's really the only reason to trade crypto, right? If you trade crypto as if it is just a kind of like a vehicle for trading the S&P, you might as well just trade the S&P. And I mean, I'd be much happier if I traded the S&P the last few weeks, because I've been dead on it. And crypto hasn't followed suit, but still, like at some point, right? And I know this just like kind of sounds copy, but 100% at some point we're going to decorrelate again. And then people are going to be like, but macro, and shit's going to go either like much higher than the macro, or it's going to go much lower. I think like it's just discounting that entirely by just kind of shitting on people that have a different opinion than you do. It's just kind of like the stupid thing to do, I feel like.
The end result to me is that most fiat currencies are going to end up continuing to devalue as they are forced to do things if the economy truly does go bad. And I think that'll put more attention on risk assets, alternative currency assets, like all that's good for crypto in my mind. It's just a weird way to think about it, but I guess it's almost dollar milkshake-ish. And hopefully I don't make Cred cringe too much talking about that. One other random thing that I thought of, because I heard it on another podcast, was apparently ARK, Kathy Wood's ETF, is still getting like record inflows.
So terrifying, actually.
Isn't that terrifying? Like,
yeah, that is terrifying. Stuff like that scares me.
Yeah, like it Eiffel Towered, and apparently people are still buying, still believe, and that gives me some hesitation for like tech's ability to do anything anytime soon. Like we've seen this in other markets, right, where you have a 5-year, multi-year period. I mean, I guess NASDAQ itself did it, right? Took a really, really long time to ever make a new all-time high after 2001. Never made a high, even in the Great Recession. So maybe tech gets pummeled in that, but that doesn't mean that crypto and tech have to be the same thing. Like Web 2 tech, that's all those public companies. So anyway, pretty amazing. The SPYs or the ARK ETF is doing that. I guess we can kind of summarize what we're hoping for. We didn't really talk about news. Was there any real updated news versus what we talked about before? I guess the BlockFi thing was confirmed more than anything. Was there any other kind of news that y'all were interested in that you think could impact the market?
Besides like other parts of like the crypto industry just going broke left and right, I don't think like nothing that would actually surprise you anymore, because like you just look at pretty much the lending market and everyone's just belly up, right? And every single day there's some new story on that front. But yeah, I think on that front we're through the most of it, just because pretty much everyone's wrecked now.
Really
yeah, there was another insolvency or client withdrawals, and I think it was Vold, VAULD.
Yes.
They halted client withdrawals and got some restructuring lawyers, which aren't things you do if you've got a lot of money and you're financially healthy.
They like in India or something like that?
They're in Singapore, which is the epicenter of all the good stuff in crypto. Yeah.
Oh man, it's been unbelievable.
Shocking. And also my favorite bit of news is Plan B, the stock to flow expert, was posting his Bybit ref link on his feed saying 90% of his crypto is in cold storage and 10% he uses on Bybit, presumably
to get liquidated.
No, he was very nonchalant about it. He was like, oh, just some trading, just some passive income, because we know trading is so easy. You just load up a Bybit account and boom, passive income. So that was quite fun to see.
Just trade the 5 minute on a stock to flow model.
Correct. Just on chain stock to flow scalping in the London session. That's how you really make it.
I mean, the thing is with that, right, is you kind of realize how full of shit he has to be when he does something like this. Because if you like truly believe in stock to flow and like price is going to infinity, you would not risk it by like margin trading like that, in my opinion anyway. So it's just kind of basically just trying to like make money out of his followers is kind of my call. But
or he's underwater himself. Like,
yeah, I mean,
doesn't have enough. I mean, he's trying to make it all back in one trade.
I mean, I would guess that's the reason, because I mean, you've seen a lot of people like even on crypto Twitter, right? You see a bunch of people start like NFTs now, or like do like shill more and more ref links, all that kind of stuff. Start their paid groups. I mean, it's really not surprising, right? It happens every single cycle.
Yeah, very bear market material.
Yeah, people are like rekt. They don't want to kind of admit it, but they still have to kind of make or like try to make it back somehow. And if they're completely wrecked, they just start something like that. It's happened over and over and over again. You see it all over the place. And I always find it funny when those exact same people kind of like pretend like they're so cool. I hate that so much, but is what it is. If you start calling out every single one of them, you would never hear the end of it. So it's like not really worth it, because it's not going to change either.
Bitcoin only people, Bitcoin maxis, they probably are down spirit wise as much as anyone, it's like they just didn't get significant gains this cycle, and then they gave them all back, like completely back to the prior highs. And unless they were, God forbid, willing to sell some and do some stuff for their regular life, which Peter McCormack got trolled consistently for ever doing that, then they're just sitting there right now underwater versus what they were like 4 years ago. So that's a painful place to be.
I mean, that whole premise is so insane to me still to conceptualize that we're at 2017 prices, because I vividly remember like all of 2017, 2018, just like whatever, my entire crypto history. Like if you look at Bitcoin, the reason the 2018, 2019 bear market was so scary is because there was no prospect of any serious money ever buying this damn thing, right? So when it crashed in 2018 and went through that bear market, I remember, and I was speaking to Donald about this at the time, I was feeling like existential dread about like, why would anyone buy this now, right? It was a purely retail-driven market. Retail got purely obliterated, and there's no kind of institutional holder base or backstop or whatever else. And, crypto native wealth, like the desks and prop firms, were a fraction of what they are now. It's like, who's going to come touch this thing? And it was the same thing for ETH, right? It was like, it ended up just being a conduit for illegal securities, fundraising, offerings, whatever. Fat protocol thesis. They're all selling their treasury. Everything nukes. Nothing was built. It all went to zero. And you're looking at this thinking, oh my God, like, why would anyone like ever buy this thing again? And you didn't have DAOs, NFTs, DeFi, any of that type of stuff at the time, which, obviously makes the conviction harder to hold. But it's just absurd and hilarious to think from a price point of view, all the kind of quote unquote progress we've made in the fundamentals, like, the institutional adoption and holder base of Bitcoin with ETH, everything we've built on top of it. It's like it never happened. It wasn't real. It's like, hey, wake up, buddy. Let's read this ICO white paper and see what Ian Bellina thinks. That's where we're at.
It was a very different market. And also, yeah, the average participant had way less money.
Yeah.
It's insane, actually. Like when I think of what a lot of money was then versus what we consider a lot of money today, it's completely different conversations.
Yeah, even with the participants, right? Like if you
Yeah,
talk with
like people we
anyone,
know.
really. Yeah.
I mean, I don't owe Voyager hundreds of millions of dollars, so I consider myself rich in this market environment. Don't know about you guys.
Yeah.
But like to like what I said earlier with like the stable coin market cap and like the crypto market cap, right? You look at this and you have like USDC and USDT together, right? They have like a market cap of ETH now, right? Like this insane. Like if these prices, like if we have like Bitcoin at 10K and ETH at 400 or something, you're gonna see the stable coins actually eclipse. You're gonna see the stable coins eclipse or like be exactly the same as the value that we have of the major cryptocurrencies, right? And then that's all kind of money sitting on the sidelines, just waiting for stuff to get better. Which, I mean, that is really, really tough to be like too bearish on, unless you just think, Tether or like USDC is going to blow up, which I don't think either one of them is going to happen.
We are basically wondering how bad can it get, but all of us seem to think that generally in the long-term scheme of things, these are pretty good prices. You're just afraid.
Yeah.
You're just afraid of the potential minus 50% more.
Yeah, this is why like stable coins are blowing up, right? Like you had like the Luna stablecoin blow up. So like if you're worried about crypto going to zero, you wouldn't have your money in stable coins. So this is like money that wants to be in crypto.
Yeah, I think if you generally, I've been thinking a lot about this because I do have exposure to stable coins, like important exposure, you know. But if you think crypto is not going to die, if you think not everything is a scam, like at some point you got to just let it ride. Then I think that in the long term, we will look at prices below prior all-time highs. So below 20K, below say like 12, 1300 for ETH, below $1,000 for sure. I think below 20K, below $1,000, we're going to look back on those unless crypto is in a turbo nuclear winter scam, and those will be really, really good prices with a long lens. It's just so much liquidity is gone, so much buying power is gone, so much willingness to participate is gone. That's what makes it hard to say like, okay, but it's a good price right now. Like it could be a good price on a 5-year horizon, but not be a good price right now. And that's essentially all we're trying to determine on this show for the coming year.
Mm-hmm.
At what point will it be a good price right now?
Yeah, and then you're gonna have to figure out at what point, like how, and this is like always interesting, like from a game theory kind of perspective, how you're gonna get these people that are sitting in stable coins. Like let's say like 25% of that wants to flow back into the market. It's just waiting for like better conditions, and I think it's more than that. Like how do you get them to kind of redeploy? And it's like an interesting kind of question to ask yourself, because if you do like find an answer, please make it happen. I'm sitting here. I want prices to go up. Please pump my backs. But yeah.
Well, on that note, let's leave it there. Cred, did you have anything to close out with?
No, I think we covered. I think we covered most of it. To be honest, you know, all three of us trade short term, medium term, long term, whatever. So we're obviously going to have a bias towards getting it right from a time and price perspective, because that pays the bills a lot of the time. But yeah, from like an investment point of view, you know, as we've said repeatedly, if you're able to buy stuff or at least be liquid in the year where literally the entire industry contracts and the economy contracts and there's war and dollar goes up and commodities goes up and like everything was completely appalling, like if you survive that, you'll be fine. You'll probably do quite well. But you do have to buy at some point. And it's worth bearing in mind that a lot of the bearishness and narratives and big public bears, etc., some of them will never buy back. And for some of them, no condition will be good enough to ever be worth taking risk again. Like if it keeps dumping, they'll lower their targets. If it goes up, it'll be a dead cat bounce. If it's a reclaim, it's an echo bubble, MicroStrategy chart, whatever. And you know, at a certain point, you have to give yourself exposure to the upside. And it's just about with crypto, it's about being able to stomach we say survive a lot, and we've sort of used that tongue in cheek as in like don't get liquidated. But we've seen with this crunch just how kind of broad that term is, from lenders to centralized exchanges to project treasuries. Like surviving is actually pretty hard. But it's like, it's not easy at all. Like especially big names going down, all that type of stuff. But yeah, I would say that you do have to buy stuff at some point, and everything else is just being able to stomach volatility risk. And that exists on both sides of the spectrum. Like, you can buy a good level, and in crypto, if it goes down 30-50% of there, especially if you're doing business at like apocalyptic extreme levels, you should be fine with that. And then if the market has a 0.5% range for weeks, months, whatever, you should also be able to stomach that. I think when it comes to survival, yes, not your keys, not your coins, all the exchange stuff going down, that's important. But you should also be able to survive both ends of the volatility spectrum. And I think we're entering a period where that's becoming increasingly relevant. And for those purposes, that's why I think almost all of us rely on spot exclusively to do that rather than derivatives. So maybe stay away from the Plan B RefLink.
Let's leave it there. Thanks so much, everybody, for being with us. We appreciate you joining us. No, it's not always the easiest message, but we're trying to bring you the best information that we can. Go to weeklyopen.com to check this episode and more. Go to weeklyopen.com/FTX. Stay off the leverage. DCA in, DCA out, whichever way you got to do it to survive. Until next time, thanks for being with us. We'll see you later. Be good.